From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 4th, 2017. In a moment, we'll be taking a look at the USDCHF, the US dollar versus the Swiss franc for today's trade analysis. But first, a recap of one of the trade suggestions made yesterday during the live trade room. If you're taking a look here at the GBP USD, Great British Pound versus US dollar, looking at the daily time frame, look at the orange shaded area and the purple shaded area at the very bottom of the chart. For the most part, with the exception of the one low liquidity spike that we see here from last week during the holiday week, we have been stuck between the orange zone at 1.2285 to 1.2321 as resistance, and the purple zone 122.45 down to 122.20 as support. Yesterday, taking a short into the 22.85 level, the orange shaded area, profit was made as it pushed all the way back down towards the 122 level. Now, with the trade manager that we put on the trade, the market came back up. We had locked in 15 plus pips of profit on the trade using the trade manager. The market came back up and took us out at the remaining position with 15 pips of profit. Good news, because it went all the way back up into the 22.85 level. So we saw a good deal of profit. We closed some actually when it was down here in the purple shaded area during the trade room yesterday, and then it came back up. I still think as long as it holds underneath this orange shaded area, there could be some opportunities. We'll have to wait and see how the day goes if we get back into that. The risk will still be a break back above the 123.20 level, the top of the orange zone. That's the risk if you decide to go short again here on the GBP USD. All right, moving on over to the dollar franc. Here on this currency pair, we have been in an uptrend recently. The blue trend line on the right-hand side clearly shows us that we have been in an uptrend. You look back to the left-hand side of the chart, black circle, we've studied that. The resistance at the blue shaded area, that has been duplicated on the right-hand side. So historical monthly, multi-month resistance going all the way back into November of 2015 now. Resistance into the blue zone. Blue zone is 102.85 to 1.0305. That's the blue shaded area at the top of the chart. Purple zone just underneath it. Red circle shows resistance there. That's been acting as our support, 102.50 down to 102.35. So we blue zone, purple zone have been kind of constraining the market movement, with, again, the exception of last week. During the holiday week last week, we did see a low liquidity spike as the market pushed all the way down towards the 1.0050s and then suddenly reversed and came back up. So here we are stuck back between the blue and the purple shaded area, just like we were prior to that low liquidity spike that we saw last week on the euro dollar and the dollar franc. Anyway, we're stuck between here. I don't think we want to change our mind about this. We're still in an uptrend. We're still above support. There's no reason to go short at this current moment here for the dollar franc. Let's go ahead and take it on down to the 4-hour time frame as we get down here. Yesterday in the trade room, we studied the false breakouts. In fact, I could put another circle here that represents a false breakout. So many times now, 4 times, to be specific, we've seen false breakouts. No real indication of a breakout above 1.0305. It's spiked above it, returned back below it, sitting down in support. Look at all these times down here, support into the purple zone. So that should tell us what we're looking to do, with the exception, again, of the low liquidity spike that we had last week during the holiday week. I think we're still looking at support between 1.0250, 1.0235. And the only reason to believe that we should start going short would be a breakout under the purple zone, specifically, I think, on the daily time frame, which we haven't seen. If we go back to the daily for a moment, you note here, we did have that little push, and let me zoom it way in here. We did have that little push underneath where that low liquidity spike. I don't think we can trust that guy right there. I think we have to look at all the other candles that did not open and close underneath the purple zone. So I think as long as it hasn't broken that purple zone on the daily, you're disregarding this low liquidity spike, we're still focused in on the upside. 4-hour time frame again. So that's what we're going to do. We're going to focus in on the upside, looking for buys close to 1.0250, 0245. The lower you can get, the better. Of course, your risk is, of course, the break underneath there. So your stop loss will go underneath the purple shaded area. If you decide to get into it, that's what you'd be looking for. Somewhere down around 102.10 might be a pretty appropriate stop loss down here, close to where this red line sits down here. 102.10. We'll give you an appropriate risk, about 40 pips of stop loss if you get it at 102.50, and then you're looking to target the blue zone as your first target. And I say that as the first target because clearly, if it breaks that multi-month high into 1.0305, we're looking for it all the way back up here towards the 1.0400 level. 0375, 0400 is the yellow shaded area up there. So that becomes really our significant target. We'll peel some profit likely at the blue zone if we do get taken into the trade, but looking significantly to target all the way up here in towards the 1.0400 level, maybe 0375, but the yellow zone at the top of the chart for the dollar franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.